Welcome to the Money Market Show. I'm your host, Paula Joy. The Money Market Show is sponsored by the Money Market Inc., your Amazon for mortgage solutions. If you know of any friends, family, or relatives, relatives are family too, huh? Okay, but any friends, relatives, or colleagues who are looking to buy, sell, or refinance, please, by all means, go to the Money Market Inc. This is where you're going to go because they have the Amazon for mortgage solutions. Today, I have with me on the show, I'm excited. First of all, we're in beautiful Oakland, beautiful California, beautiful Lake Merritt. And I'm here with two lovely women, ladies. And they're so nice, very nice looking. I'm so privileged. I'm so privileged that I'm doing this thing. I should have been doing it a long time ago, people. But that's just the beginning. They said the journey of 1,000 miles begins with that first step. So I have with me, a seasoned realtor. Her name is Stephanie Belasuma. I don't know how to say that name. What exactly? Belasuma? Okay, cool. And I think I need some water on the show. And then also with me is a first-time home buyer. Her name is Andrea Ventura. She's Ventura. She's from Southern California. Okay, cool.
Family is.
Okay, cool, great. So welcome to the show.
Thank you. It's an honor.
Oh,
to be here. Thank you.
Oh my goodness. Okay, cool, great. So first time home buyer. So why do you want to buy a home?
I think it's a great investment. I think everyone should purchase a home at some point in their life, and I think I'm at that point.
Wow.
Yeah.
Okay. And Stephanie, so you have a lot of experience in real estate, right? And you got a lot to share today.
I do.
Okay.
I do.
So what's your first question we have for me or for the first time home buyer?
What is the first question that I have? Or
Do you have a question for me?
I think I have the question. I have the first question. I have a lot of questions.
Yeah, exactly. As a first time home buyer, you have a lot of questions, right?
So I need to know, okay, the biggest thing of buying a house and what everyone says is like that down payment. What do I need for a down payment? Do I need $20,000, $50,000? Because that's just the big deal with the first time purchase.
right. And when you ask a realtor that, the realtor would give you the preferred lender, like Paul here, in the money market, and they'd be able to help you with that. And then he would move you along once you have a underwritten pre-approval to me, and I would guide you through the home buying process. But we do start with trying to find out what you can afford each month, and that's going to be with a preferred lender.
Okay, exactly. Good. So let me answer that question since I'm here, the Amazon for Mortgage Solutions. Okay, cool. So what you need to do basically when you buy a home, because this is your biggest investment, right? So you are afraid, you don't know, okay? It's like you're wading through those waters and my goodness, you don't want to do that alone. So the first thing, like Stephanie said, is to find out what you are approved for, especially where do you want to buy?
Probably like Sacramento, Rockland area.
Okay. What's the average price over there?
I think it's like 500, maybe 600-ish. I know I have a relative that just purchased a home and it was 500.
Okay, cool. So the first thing I'm going to ask you, where do you want to buy? And then what's your budget? Okay. And we'll sit down with you and say, okay, how much you have to put down? So you determine how much you want to put down. And so, of course, we have some programs that you don't need any money down. So depending on where you zero down. So, okay, zero down. If you have served in the military, for example, okay, have you? No? Okay, cool. So and Rockland, is it a rural area or not? Is a country? Yeah, rural. Yes. Is it a countryside or not?
I think there is some, but not where I want to move.
Okay.
I want to live in the suburbs. Suburban area.
Okay, cool.
Yeah.
So in that case, therefore, you cannot use what they call the USDA loan, right? USDA, the United States Department of Agriculture loan, gives you an opportunity to buy with no money down. Or if you serve in the military, you can also buy no money down. Okay, but you have not. Okay, so you have not served in the military and you're not going to live in a village somewhere. So guess what? The next option is basically we can still give you a loan without any money down. Are you excited about that?
Yeah.
Okay, cool. Great. So,
I've heard of something like the FHA loan.
yes.
But I don't know.
Right. So FHA, we have FHA, for example. I'm more familiar with the Bay Area, for example. We can go up to $970,000 for a single family residence without any money down.
Up to
970.
970,000.
Yes.
And what's the monthly payment on that?
Well, we'll get to that. There are many factors, okay? So as a duplex, so it looks like you're a side. What do you do again?
I do solar.
So you're a businesswoman?
Yes.
Okay, cool. You think you always think about how to make money. Is that correct?
Yeah.
So maybe something like a duplex also. So say, for example, you bought a duplex, you live in one unit, in a classy neighborhood, for example, live in one unit, and you get the other person pay your mortgage for you, or half of the mortgage. We can go up to $1.3 million if you were to live in the Bay Area, like beautiful Oakland here. Okay? If it was a triplex, well, now you can live for free. You can live for free. You buy a triplex for $1.5 million, guess what? You can live there for free. You got 2 units paying your mortgage for you, and you can basically live there for free, right? So no money down, okay? And the last one is a fourplex. A fourplex up to $1.8 million. I'm talking about the Bay Area. The 9 counties of Bay Area, okay? We can go up to $1.8 million, and you don't have to come up with any money at all. So you gotta live in one unit, and you got those other 3 people paying your mortgage for you. Maybe you might be able to cash flow, actually.
Okay, so how do I get approved for that?
Okay, good. The way you get approved for that, before you go to your realtor, you say, okay, which option do you like, first of all?
I want to do either triplex or fourplex.
Oh, good. You're thinking money. You're money, you think. Okay, cool. So we can get that. How do you get approved for a fourplex? Okay, we're going to look at how much money you make. Okay, we're going to look at your income. So since you are a 1099 or what? What do you do?
Yes, 1099.
You're 1099. So we'll look at your tax return.
Okay.
Okay, and we'll do just 1 year of tax return. We're good. Okay?
Okay.
Okay.
So what if I don't have tax returns? What if the previous year I didn't, COVID didn't work much? Can we do bank statements?
Yeah, bank statements. Good. That's a good question. Looks like somebody be educating you. Okay, cool. Right, that's great. Bank statements, you can do bank statements for sure. But you need, for bank statements, you need 10% down. Okay, 10% down. You need to come out with 10%. But if you were to do a W-2, okay, or do verification of employment, just verify your employment, you don't need any money down. Okay? But if you were to go alternative financing, which is basically what's called non-QM, and if I'm talking too fast, slow me down.
I'm here with you. I'm here.
Okay, cool. Okay. So if you're doing a bank statement, okay, which is a non-QM loan, okay, non-QM just means for non-qualified mortgage. Okay, you have qualified mortgage and non-qualified mortgage. Qualified mortgage is basically usually FHA, USDA, VA, conventional, or jumbo, right? And jumbo is anything above the loan limit for that county. Okay, so the non-QM is basically alternative financing. You can use, like your primary residence, you're going to use what? Bank statements, okay, or P&L, profit and loss statement. Or we can use just verification of employment, or we can use what we call 1099. Those are other options that we can help you buy a house, but you need some down payment. And some of that down payment, it doesn't have to be all your money, right? It can be a gift, right? Your parents or your relatives can give you money, and all we need is basically maybe the reserves have to be your own funds. So even in that case, we can do no money down, so long as you can show the reserves being your own funds. So based also situation now can tell you, okay, this is how we can qualify you based on the information you give us. And after we qualify you, then Stephanie, you can start looking for properties for you.
Okay, so how much would one have to make for a previous year tax return to get approved for a 1.3 million triplex or fourplex?
Well, okay, 1.38 million.
It seems like 100,000 is not.
Well, yes, sure. Basically, yeah, of course, because the interest rates are going up right now. Okay, just about 3 months ago, interest rates were lower than 3% for FHA, but they're more like 4%, even 5% now. If you're going to buy without any money down, we strongly recommend that you put 3.5% down. Because we put 3.5% down, therefore the risk for the lender is lower. Okay, we have a little bit of money, skin in the game. But if you put nothing down, then of course the interest is going to be higher. Okay, but for me to give you exact figures, okay, I'll have to sit in front of a computer. Because what happens is that basically, okay, with FHA loans, USDA loans as well, you have what they call MI. Okay, mortgage insurance premium. Okay, you got to pay like 1.75% of the loan amount that has to be paid. But that can be financed. That means, coming up with that amount upfront, it can be financed. But another thing, like Stephanie might know this, is that basically the seller can pay your closing costs, right? And I know that it's kind of tough these days, so because it's a tough market. Many sellers will not want to, entertain that. You're knocking your head. So
it's going to depend on the motivation of the seller. Like if the home has been sitting on the market a little longer, they're a little more motivated, right? Because why are we not getting any offers?
Right.
So if, usually when the home is new and fresh, they want top dollar, obviously. Mm-hmm. But the longer, you have to think like a seller, why am I not getting an offer? The longer the house sits on the market, the more flexible, should I say, the sellers are with the terms of an offer that comes in. So because we're in a seller's market here in the Bay Area and also across California and other parts of the United States, it's really tough to get credit. But it depends, And then if it's, like a source, like maybe it's your aunt or your aunt's friend or somebody that you don't know, and then you're going to say, hey, Steffi, this person wants to sell me their home and we're going around, they don't have to pay a commission, so they may be a little more flexible. It's going to depend. Not every transaction is the same. And I can say that in all these years that I've been doing business, there's not one that has been the same. So it's just going to depend on the situation.
Okay. How often do you find triplex or duplex,
it's out there, but the inventory is really tight being a seller's market. It really is. And it just has to make sense for you. And one thing that I take pride in is, I'm working for you as the buyer. So it has to, you just have to be comfortable with whatever the terms are that we put on the contract. You do have to be a little bit more aggressive nowadays in regards to contingencies. And contingencies, are like your appraisal, your loan and your inspections. You have to be flexible in regards to those things. And Paul, if you want to talk about contingencies.
Wait, what do you mean flexible? What would I need to be flexible
Meaning, like for example, your loan and appraisal. Like if your lender for the loan, you've submitted all your documents already.
Right.
And he says this person is solid. We have an underwritten approval from the lender. Then we don't have to put a loan contingency in there. You're going to have to put a deposit in. Let me back up a little bit.
Okay.
Okay, so once you get your offer accepted, there's a deposit that needs to be deposited and submitted to the escrow company within 3 days.
Okay.
Typically in the Bay Area, it's going to be, the standard is 3%. So I'm going to just use round numbers.
3% of the property.
Of your offer. So I'm going to use round numbers so that, for the example of this loan. 500,000, 3% of that is 15,000. That's going to be your standard here in the Bay Area. In other places, you could probably put a less amount, okay?
Okay.
So that is your deposit you're going to put up in escrow. Now there's contingencies, which like I said, your standard is your loan, your appraisal, your inspection contingency. The less contingencies you have, the better for the seller, because it's telling them that you're ready to proceed and you can, we're able to close the transaction faster and they're going to get their money faster and can move on to the venture of whatever other house that they're going to buy in the future. If you have a loan contingency in place, which if you're, like I said, he doesn't have, he says you're solid, we don't have to include that, right? Okay. Your appraisal is going to also be determined by what the estimated, value is on your home. Again, that's determined by your lender. But if we're putting an offer in that I feel is strong, I'm going to ask your lender, like, hey, I'm going to go ahead and not put this contingency in. And if he's agreeable with that, I won't include that in this market. And then your inspection contingency. That's, as a buyer, you really have to beware, and I'm always going to encourage to have an inspection contingency in there. And it's your opportunity to do your due diligence. Typically in this market, a seller's going to provide their own inspections because they don't want to leave any more money on the table. So we review those inspections, and we're going to have to say we're going to be able to move forward as is, and we're going to accept everything that's on this inspection. Now, if you do have any of these contingencies in place, let's say, hey, I know we have an inspection, but I still am uncomfortable. I want to still, do my own inspections. We can do that, and we can leave our inspection contingency in there. It just won't be as strong, okay? So we get our own inspections. Let's say we do that. They accepted our offer. We get our own inspections. And now, you're like, okay, I'm good with inspections. And so we physically remove our inspection contingency with the seller. So in writing, we're going to give them a removal of that inspection contingency, the loan and appraisal and whatever else. So now we have no contingency. Now, if you renege on that, you're like, oh my gosh, I'm tripping off of, the pest report that came out. And I'm like, we just removed the contingency. We cannot, go back on our word. We just told the seller that, right? If you do, your deposit, your $15,000, is going to be in jeopardy of being lost. Of course,
the full thing? Or
possibly. I mean, you of course, you're still going to have to go through mediation and all of that. But that's what a contingency is, and that is a long explanation, I know. But I don't know. Do you understand how I explained it?
Yeah. I mean,
okay. So you
I get it for the most part.
Okay. So what I'm
fully
saying is, you can't back after you promise that you're going to move forward.
Right. Okay.
Your deposit is there to give security to the seller. Right?
That it's gonna close.
Yeah. And you're removing the contingency, like the inspection is, like I said, that is your opportunity to either accept what they have, do your own inspections, or or not. And
why would someone remove the inspection contingency if the seller already, because an inspector does all that stuff, right? So why would me as a buyer, why would I want to remove that? I would only remove it if I wanted to do my own or bring my own inspector. No.
Well, either you're going to accept what the seller already has.
Oh, okay,
right?
I got you.
And then you're going to remove it up front.
Okay.
Or you're going to do your own inspections. But I would say, even if you want to do your own inspection, I'm like, they might not accept it. Let's just go ahead and remove it.
Okay.
But just know what a removal is. If you remove that, you're in jeopardy of losing your deposit. Any of the contingencies. And that's such a huge thing that I feel like agents don't explain. And knock on wood, but this whole time that I've been licensed, I've never lost any of my clients' deposits. But it can be a horror story. So as I say this to you and any other buyers that are out there, if you remove a contingency, you need to be very careful and you need to know what you're doing, because you can lose a lot of money. We don't work for free. We work hard for our money. So I really highly encourage you to just proceed with caution and just make sure that you've thought it out and your agent has consulted you through that.
Yeah, I was also going to add another way that you can make sure that your offer is solid is that, especially now in a very competitive market, I don't know about Rockland and Sacramento, but I think even those markets, it's pretty solid across America. Okay, one way, for example, somebody made an offer, came to me, hey, Paul, and there's a property in Fremont that was listed for $1,150,000. It's only 1,000 square feet. Okay. And the lot size is 8,000. And they came to me, okay, Paul, this must be all cash offer. And we will offer for them for $1,350,000, all cash, closing in 7 days or sooner. And they said also write a cover letter, a family picture, and basically everything, trying to entice the seller. Guess what? 1 day later, we got an email back from the agency. Sorry, the seller decided to take another offer, way higher than your offer. Can you imagine that? It's a small house and they're going to tear it down.
He accepted another offer.
The seller, this old lady accepted another offer. So I'm actually going to interview that agent. See what's going on here. How many offers did you accept? How many did you receive? Right? For a 1,000 square foot home, that needs to be torn down. So what are they buying? They're only buying the lot. And that guy, he showed proof of funds over $3 million. See, he didn't get it. Okay. So, but one way to do this also to make sure that your offer is accepted, right? So, I mean, I was going to say it's the entire sell. Okay, you need to, as an agent, maybe it should tell you, you need to build a rapport with the the agent, the listing agent. That's very, very important because what happens that people are sending so many offers in. I mean, how would you feel if somebody sending an offer but never even talked to you?
And that's huge, huge, huge. And I've said this before, like, it's different now. Like when I first started, that was standard, right? We would call each other, get a feel of, you know, what the owner's looking for to get our offer accepted. But nowadays, I mean, and I'm not trying to bash any agent, but your representing agent should contact the other side. I have one in this market because why? Because I'm like the only person that called the listing agent. They're like, you know what's crazy? I'm going to choose you. You're not the highest offer, but I got like 5 offers in my hand, and out of all 5, you're the only one that called me. They just texted me or sent me a blind offer. So it's huge for your agent to you know, contact the listing side and really know what the motivation is of that seller and why they want to sell. Because sometimes it's not price. Sometimes it's not, you know, and again, it takes a little bit of wit, but you will have an idea if you're able to call the listing agent and they're, you know, giving you some hints.
Exactly. So build that rapport. Okay, now you build that rapport and she will present it you. She presented an offer to the listing agent and maybe sometimes with the seller present, sometimes that's the case, you know, and your offer's accepted. What's next, right? You remove all the contingencies. That's what will come in. Your loan is being processed, right? So even though it will give you an underwritten approval, it doesn't mean that that's it. Okay, it doesn't mean that your loan is going to close the following day. Okay, the whole thing is going to go through. Now they're going to do appraisal on the property because it's contingent. Okay, or the loan giving you the loan is contingent on the appraisal. Even though we remove the appraisal contingency and the loan contingency, the lenders still need to do what? Appraisal on the property. Right? And they got to make sure that the property appraises to your offer. Okay, most times it is going to do that. But sometimes it does fall short. And if that falls short, okay, what do you do? Okay, you're a first-time home buyer. You don't have a lot of money. What do? Do you lose your deposit? No, you don't lose your deposit. So we can do what they call appraisal rebuttal. Okay, we can rebut that value. Maybe sometimes appraisers are so busy nowadays, and guess what happens? Sometimes they don't go out there themselves. They'll send somebody to go take pictures. And then maybe they don't know the area. And so, for example, here in Oakland, okay, one street is even the same zip code is different from the other street, right? And so, what do you do? And then, how about the quality of that property itself? Because, for example, if the property is rehab, and like we do rehabs, now we make sure we do a good job. So if that property is rehab and somebody just came out and took pictures from outside and doesn't know the area. So what we're going to challenge that. Because we before we tell you recommend to remove that place of contingency, the agent would know what are the values in that area. Okay? And since we know real estate ourselves at the back of our hand, we're going to know, we're going to tell you, hey, we think this is what we see here. So that way now it makes your offer stronger. And so once everything, you may still have some hurdles. Like I said, the appraiser can come short. And in that case, if that happens, we're going to rebut it. And in most cases, they're going to accept it. And if this lender doesn't take it, we're probably going to take it to another lender. Okay? Because we're a brokerage firm, and we're not just dealing with one person, we can take. But the only thing with if we're doing FHA, there's a case number. Okay? There's a case number, so they already know you did appraisal here. So it's kind of difficult to move around. If it's a conventional loan, there's no case number. And conventional loan, you might decide to go for a conventional loan because a first-time home buyer, you can opt to go for something called a home possible by Fannie Mae or Freddie Mac, which is a government program. 3% down, that's it. You got 3% down. So why don't you go for a conventional loan as opposed to FHA loan? Because FHA loan, you're gonna have an MI, and the MI is a bit higher than if you did a conventional loan. Depending on the beauty about FHA is basically your credit can be as low as 580 without any money down. Even 500, your credit can be as low as 500 if you have 10% down. The good thing about FHA. Other than that, I would not strongly advise for you to go for FHA.
Absolutely.
Okay?
Absolutely.
Cool. So we got that now. The appraiser comes in and everything pans out. Right? Of course, then you have some conditions. We got to go through all the conditions and stuff out. Once everything is approved, then you're going to have what they call a CD, okay, closing disclosure. It will go out to you, and you review everything works out. Guess what? Then after that, you're gonna have your loan docs, right? And the loan docs, you sign loan docs, you're ready to close. And Stephanie can come to your house and celebrate and do a housewarming party. But one thing I want to talk about, unless you have some other questions.
I have another question. So basically you're saying first-time home buyer doesn't have to be a single-family home. First-time home buyer can be duplex, triplex. That's still a first.
Condo can be a townhome, can be a single-family residence.
And would you clarify just to confirm, because I know like if you haven't made a purchase in 3 years, right, that qualifies you. So even if you bought a home,
Okay.
if you haven't bought a home in 3 years, then you are still a first-time home buyer for some programs.
But can you get an FHA loan twice? So say you got one 3 years ago, and 3 years later, you're still a first-time home buyer
You're selling
again.
this one. You're selling the existing property, right? And you go to a new property, you can have, of course, new property, you get an FHA. You can't have two FHA loans at the same time.
Oh, got you. Okay.
Yeah.
Okay.
Now let's talk about the current climate. You see interest rates are inching up, right? Is that something you're interested in to talk about as a realtor?
Are there concerns? Yes. And do we have to worry about it here in the Bay? Yeah, but we still don't have inventory, which is also a factor. I mean, we have inventory, but it's, we lack inventory, should I say. And so, there was a question that I've seen on, my Instagram, and someone asked, they said, well, interest rates, do you think they have to get up to 6% to see a slowdown in this market? And I just don't feel like it's going to depend if there's inventory or not. That's really, I think, is going to be a big factor. Even though for buyers, though, it will be an issue because you won't be able to qualify for some homes, right? Because as interest rates go higher, the budget for your home gets less, and then you won't be able to approve for a particular home that you once thought that you'd be able to approve at because your loan approval amount becomes low.
Yeah, that's correct. Okay, so about 3 months ago, or less than 2 months ago, the interest rate was still less than 3%, okay, for FHA, right? But now, if I punch in, whatever scenario you see, interest rates are between 4.5 and even 5%. So they've gone up quite a bit. And okay, and we know that the Fed is going to meet several times this year. The thing is that they're buying less mortgage-backed securities. They're not buying a lot of the treasuries, okay? And so when they're not buying the treasuries and when they're not buying mortgage-backed securities, what happens is that because they're trying to climb down on the inflation, so in that case, that's where you have the interest rates going up, The Fed rate itself hasn't gone up that much, but guess what? The banks are reflecting what the Fed is going to do, right? And because of that, everyone is increasing their interest rate right now. But actually, the rates are still very low, comparatively low. Just about 12 years ago, the rates were in the 7%, okay? And people always want to buy properties, even when Jimmy Carter was in power before you were born. Yes, I hear that the rates were about, at 16%, but people was 16%. But guess what? It's all about demand and supply. Yeah. Do you think when the rates are 16%, it's a good time to buy or not?
I guess it depends what you're trying to do, though.
Yeah. What about you? When the rates are 16%, is that a good time to buy or not?
I don't know if it's a great time to buy, but people still need to live somewhere, right? Are you going to pay someone's rent, or are you going to own it yourself? That's the question.
The key thing is basically, what is the demand? What's the supply? Okay, because when the interest rates, you'll see more properties on the market, okay, very soon, okay? Because there's a fear factor, okay? The key thing is that when you have the demand, you have the supply, okay? Or you have the demand here, the supply is here. What happens to the price? Price go up, okay? But what happens that when the supply is here, the demand is here, the supply is here, what happens to the price? It stabilizes. That's what's trending right now. It's going to stabilize. But right now, we still see what? The demand is still this way, the supply is here. But very soon, because people are afraid that, hey, interest rates are inching up, so what realtors should be doing now is well, if you're thinking of buying, selling 2 years down the road, this is a time to sell. And guess what's going to happen? More property is going to hit the market. And there's going to be an equilibrium. Okay. And guess what? Okay. Then guess what? And maybe more fear comes in, supply goes up, right? Right? And what happens? Demand is low, right? Guess what? Now it's a buyer's market. It becomes a buyer's market. So at the time when we had interest rates were very high, okay, so there's a middle factor here, right, which is interest rates. When interest rates are so high here, what was going to happen? The demand is very low. What's going to happen? You want to sell a home. People sell homes for different reasons, right? Maybe it's a death, there's a divorce, all those factors were affected. So now that is it. Of course, was 2008 a good time to buy?
Yeah.
It was a great time to buy, right? It was a great time to buy because of the demand being lower because people are losing their jobs and stuff like that, the supply being higher. Okay, what were the interest rates back then? 8%, 7%.
You have the option loans.
Yes.
All kinds of stuff
Yes.
to help
Yeah.
deviate the
Yes.
higher.
Yeah.
You have like 4 options.
Yes.
You could pay the very least.
Do you know we still have that?
Do we?
Yeah, we do
I
have
haven't
that.
seen that.
Okay,
Any of my
I just
clients.
go
That's
watch an interview. I did an interview with Access Bank just 2 days ago. I'm gonna post it on YouTube, and that's what it was. Okay, basically I interviewed this lady, but now, okay, your loan amount, the minimum loan amount is 500,000. Okay, but you must put 40% down.
Oh wow. Okay.
So even though you pay interest only, or you pay the minimum, or you pay 2.5% lower than what your note rate is, guess what? The negative going to your principal,
Yes.
but if you put 40% down, that's actually good for self-employed people because self-employed people are working on commission, and sometimes you make money, sometimes you
So
don't.
you have to put 50% down for
No,
that.
40%.
40% down.
40% down. Yeah, but we have that 40% down. But the minimum loan amount is 500,000 for Access, and their interest rates are very good.
Wow.
Yeah,
Okay.
yeah. So I got that and all that kind of stuff. So
Wow. It's a lot of information. So what is the lowest interest rate you've seen, or have you, either one of you?
well, like I said, the interest rates have inched up, right? The interest rates are around 4.5. That's the lowest right now, 4.5.
I mean, you could pay for a point to bring that down.
Well, there's a floor rate. There's a floor rate. You can't go below the floor rate. Okay, we see interest rates at 4.875, even 5. I saw the other day 5.2, 5.25. But if the floor rate is 4.5, then you can buy it down to 4. You cannot buy lower than the floor rate.
Oh, okay. That makes sense. So what would you say is like, what's the biggest hurdle for a first-time home buyer with you working as an agent?
The competition.
Competition.
So,
okay.
like I said, you need an agent that knows what they're doing.
Mm-hmm.
And, I am proud to say that, with my experience in the last year or so,
Mm-hmm.
I have high, conversion, which honestly, I don't think I put more than 3 or 5 offers. I get my offers accepted. And I'm very proud to say that, which, you just need to be confident with, the advice of your agent.
Mm-hmm.
And, I stick to my guns. I'm not like a lay down agent where I'm just like, yes, yes, yes. I really work on behalf of my client to make sure that they're comfortable with whatever terms and offer we put on the table.
Okay.
Well, I think another thing is basically this also. Let's say you identify a particular neighborhood that you want to buy a property in. Are you already used to solar door knocking? Okay. Yeah, door knocking is solar. So you may as well go in. Hey, man, I'm looking for a property to buy. And also, okay, you can work with her, with Stephanie, and she can pull the data of likely sellers in that area.
Mm-hmm.
So it's a blind door knocking at every door. You don't even know what that person just bought that house last week. You don't do that. She'll give you a list of people who are likely to sell, right? And now you can double deal that thing because you sell solar. Now you can say, hey man, everyone's going solar nowadays. I came up with some. By the ways, I can looking to buy too. Mm-hmm. So you know what I'm saying? Because
Run into a lot of people that are looking to sell. So
There you go.
I always do talk to them and make connections and stuff. So
And that's off market.
Yeah.
Right? There you go. Wonderful.
with the seller. Okay, I have one last question.
Okay.
So do lenders, do they look at the rental history?
Your rent history?
Yeah, like rental history. So like there was, obviously if someone had evictions or something like that, but do they look at,
We look at your credit. No, we'll look at your credit. Basically, look at your credit. So, of course, we want to know where you lived for the last 2 years. Because on the loan application, they're going to tell us where you live right now and how long have you lived there and stuff like that. What are you paying? How much are you paying there? Because what we don't want is what I call payment shock, right? So now you're paying $1,000, and all of a sudden you're gonna start paying $5,000, right? Because you own that property. You've just been paying $1,000, and now you own the property. You're gonna pay $5,000. That's a payment shock. Right. But that was just a mitigating factor in that. We just look at your income. If your income can support that, okay, and we have what we call debt to income ratio. Okay, if you're at the borderline of debt to income ratio, then that might be a determining factor whether or not you should go ahead and, so for example, we have what we call front end ratio and back end ratio. Front end ratio is 46.9. Okay, that means your what they call principal, interest, taxes, or insurance should not exceed 46.9% of your income. Okay, and then the back end ratio is basically includes your car payments and student loans, your credit cards, and the rest of the stuff, right? Okay, so that should not exceed 49.6%. We'll look at that and say, okay, fine. It looks like you're safe. But if you're borderline, like your back end ratio is 55, okay, unless we do a bank statement loan. If we do a banking statement loan, we can go higher because we think you're savvy, right? You are a business person, you know what you're doing. But if you're doing like FHA, the traditional loan, then we want to stay within those limits. But of course, another mitigating factor might be if you have excellent credit, because you are always on time to pay your credit obligations or your debt obligations. Therefore, we can look at that on the right or look at that and say, okay, fine, this person's good. Yeah.
Okay.
So are you ready to buy now?
I'm ready. Let's go.
Okay, so thank you so much for watching this show. As you can tell, if you're a first-time home buyer looking to buy a property in the Bay Area, it's kind of a tough market. Still a tough market, right? The first thing you got to do is basically apply for a loan. You go to the moneymarketinc.com. Okay, actually, before even doing that, you need to just call us, and we'll be able to consult with you because we're not here to sell you anything. We're here to help you. So provide solutions for your issue. Okay, solutions for your quest, solutions for your need. Okay, and so once we get you pre-approved, and then now we can hand it over to Stephanie, who's been doing this for a long time, and she works super hard, and she makes sure that she serves your best interest, right? So you're in good hands. So pick up the phone today or basically go to the website, send us an email. The moneymarketinc.com is where to go. Thank you so much, ladies. It was great to have you on the show today.
Bye, everyone.
Bye.
There you go.